Today, all eyes are on the Bank of England as it prepares to make a critical decision on interest rates. Will they hold steady at 4.7% or is a surprise in store? Let's dive into what this could mean for inflation, your saving, and the economy. 12. Today, the Bank of England will announce its decision. Most analysts predict that the benchmark interest rate will remain unchanged at 4.75%. Why? Because inflation, which rose to 2.6% in November, is still above the bank target of 2%. Inflation measures how quickly prices are rising. The bank uses interest rates as a tool to control this. By making borrowing more expensive, people spend less, demand decreases, and price rises slow down. But there is a catch: too high rate can harm the economy. Let's break it down. When borrowing costs go up, a business may borrow less. That means fewer jobs created and less investment in growth. On the flip side, cutting rates too quickly could fuel inflation again. In November, the bank's governor, Andrew Bailey, hinted that rates would likely trend downward but gradually. Since then, the Monetary Policy Committee or MPC reduced rates from 5% to 4.7%, the second cut in 2024. But here's the twist: rising prices and faster wage growth suggest the bank might have to hold rates steady for longer than expected, according to economist Paul Dales of Capital Economics. The recent inflation jump makes another rate cut highly unlikely. Capital Economics even predicts inflation will dip slightly in December but could rise again in January before easing back to 2% by the end of next year. So, what does this mean for you? The Bank of England's decision heavily influenced the interest rates on loans, credit cards, and mortgages. For now, lenders seems to have factored in the current rate, but mortgages rates are still high compared to the past decades. Right now, the average 2-year fixed mortgage rate is 5.04%, while a 5-year deal averages around 4.14%. Not exactly a holiday treat for homeowners. So, what's next? While today's decision might not bring a rate cut, all signs point to a careful balancing act by the England Bank of England to manage inflation without stalling the economy. Stay tuned as we bring you updates on this evolving story. And remember, understanding how these decisions impact your money is key to staying ahead. Thanks for watching, and we shall see you next time. For more updates on inflation rates, and interest rates, the economy, hit that subscribe button and turn on notification.